Hello all. In this session, we will understand what is foreign exchange valuation. So you must be knowing that whenever you are working in a company, that particular company can do the transaction in foreign currencies, right? So for example, if you have a customer who is the customer who is located outside your country, and whenever you want to do the billing, you want to do the billing in their own currency. This can be one example. Another example can be vendor. So you are purchasing the service from the vendor, but that vendor is located in another currency. So the invoice that he will be sending you would be in different currency. So let's take an example. Your company code currency. Okay, we already know what is company code currency. We already know what is local currency, which is also called as local currency, right? Let's assume our local currency is INR. Okay, INR stands for Indian rupees, for those of you who don't know that. So company code currency is INR and you are doing the transaction. Okay, so that is called as transaction currency. So you are doing the transaction in, let's say, USD. Now in this particular case, there will be some rate maintained in the system which will convert this USD to INR. Okay, so there is a transaction called as OB08. Okay, this is a transaction where we maintain the exchange rate for different combination of currencies. Okay, so what is the rate in terms of euro to INR? What is the rate in terms of euro to USD? All the different currencies rates that you can maintain that in transaction OB08. So we maintain the exchange rates for different combination of currencies. Okay, and I think everybody knows that these rates are fluctuating. These rates are not same. Okay, whatever rate is available today, it may not be the same tomorrow, right? So we will take one example. Let's say the rate which is available today, or yeah, let's take a example of the rate on 1st of April. So on 1st of April, USD to INR, let's assume the rate was 73. Okay, 1 USD equal to 73 INR. Okay, but as I told you, it is normally fluctuating. So on 5th of April, let's assume it became 75. Okay, so on day-to-day basis, this rate will keep on updating. So because of this fluctuation in the rate, we need to perform the foreign currency valuation. Okay, if there is no rate difference, then there is no concept of foreign currency valuation. Why we need the foreign currency valuation in SAP or any other system is because the rates are not same. Rates are fluctuating on day-to-day basis. Okay, so this is the reason why we need to understand what is foreign currency valuation. All right, so within foreign currency valuation, there are two parts. Okay, one is realized and second is unrealized. So in this session, I will explain you both what is realized foreign currency gain loss and what is unrealized foreign currency gain loss. Okay, we will take the first example, or maybe we'll take unrealized first and then we'll talk about the realized one. So in case of unrealized, if I talk about unrealized, just give me a minute. Yeah, so if I give you the example of unrealized, in that we have to take a scenario. Let's say the scenario is on 1st of April, we got an invoice from vendor for 1000 USD. So our vendor has sent us the invoice, okay, of 1000 USD. Now as you can see, on 1st of April 2020, the rate was 73 INR. 1 USD equal to 73 INR. So what will happen is, whenever this invoice will be booked, let me draw the table here. Okay, so whenever this invoice will be booked, it will be booked in two currencies. Okay, this would be your main currency. This is the currency in which you are doing the transactions. So this would be 1000 USD. Let me, instead of here, let me bring it here. Yeah. So whenever I'm doing the transaction, we got an invoice from the vendor of 1000 USD. So in USD, it is 1000. But in INR, if we convert it to the rate that we maintained, that is 73 rupees, what will happen is, here you'll be able to see 73,000. Okay, so what does it mean? Whenever we are booking the invoice, it means that we need to pay the vendor this much amount. So see, for vendor, this amount is not relevant at all, right? Vendor has sent me the invoice of 1000 USD. He is not worried about whether it is 73,000 or 75,000, because ultimately he wants 1000 USD from us. This is for our internal reporting purpose. We need to perform our reporting on our local currency, and that is the reason we need to convert this amount into the local currency as soon as we do the transaction. Okay, now let's assume the due date of this invoice is after 45 days, which means we need to make the payment of this invoice on 15th of May 2020. Okay, so we need to make the payment of this invoice on 15th of May 2020. So at the month end, whenever you are going to perform the month end reporting on 30th of April. So on 30th of April 2020, what would be your total liability? Okay, total liability would be, in terms of USD, it would be 1000, because we need to pay this 1000 USD to the vendor. But in terms of INR, is it going to be 73,000? Because we are written here that this 73 was the rate on 1st of April. Starting from 5th of April in the system, we told the system the rate is not 73, the rate has been increased to 75. So actually speaking, when we are carrying out our monthly financial statements, during that time, it would be wrong if we say that we need to pay the vendor 73,000, because 73,000 was the amount that we need to pay if the rate is 73. But the rate has been increased to 75, which means we need to pay more. We need to pay 75,000. Okay. So on 30th of April, the total liability need to be 75,000. So how are we going to do that? So as of now, the system is showing that we need to pay only 73,000 to the vendor, but actually we need to pay 75,000, right? So in order to update the system, in order to tell the system that no, there is a difference of 2000 in the foreign currency, we need to execute a transaction, okay, in SAP, which will make this adjustment posting. Okay, that is called as foreign currency valuation transaction. At the month end, we carry out the transaction to valuate our open AP and open AR items. Okay, so what that program will do, that program will adjust this to 75,000. So it will make the posting of 2000 more, and this 2000 would be what? So if you see here, when I booked the invoice, we were supposed to pay 73,000 to the vendor. But because the rate has been increased, now I need to pay 75,000, which means I am in loss of 2000 because I need to pay 2000 extra. So as a company, it is loss to the company, right? On the other hand, just assume that instead of 75, the rate has been decreased to 70. In that case, it would have been profit for the company. Okay, so this is called as foreign currency valuation, in which when you execute this foreign currency valuation in the month end, either it will be generated as a profit or it would be generated as a loss. But is it a real loss? Is it a real loss or a real profit? Are we paying this 75,000 now? We are not paying the 75,000 now. We are just generating this posting for our financial statement reporting, right? We are not going to pay now. On 30th of April, we are not going to pay. We are actually going to pay on 15th of May. The due date is 15th of May. And that is the reason, since we are not paying now, this 2000 loss, we are just booking for the financial statements. We are not actually making a loss here. That is the reason it is called as unrealized loss. Okay, so this is an example of unrealized loss. Whenever you are performing the month end closing, whenever you are doing the period end closing, during that time, if you are executing this transaction, which will generate the gain or loss postings, this is unrealized gain or loss. This is not the actual gain or loss because you are still not paying to this vendor, right? So how are we going to do that? So in SAP, there is a transaction called as FAGL underscore FC underscore val. Now this transaction, just it is very easy to remember. FAGL is financial accounting, GL accounting, then foreign currency, and then valuation. If you are using SAP ECC system, you will be able to use this transaction. But in S4HANA, there is a new transaction in place called as FAGL underscore FCV. So if you try to execute this program in SAP S4HANA, you will get a error message saying that there is a new program in place. So instead of executing this, please execute this program in the SAP system. Okay, so now let's try to see this entire scenario in the system. So what I'll do is I'll do the same thing. I will update some rate in the system for this particular date. So where the rates are maintained, I told you the rates are maintained in table OB08 or in transaction OB08. So first thing that I will do is I will go to transaction OB08. I think it's already open. So yeah, this is a place where the rates are maintained. So what you can see here is, if I want to see what rate is applicable on a particular date, I will go to transaction OB08. In position, I will just write the exchange rate type M. Okay, so it totally depends upon which exchange rate type you are using. Okay, and where do you need to maintain this exchange rate type? This rate needs to be maintained whenever you are setting up the company code. In the company code, there is a exchange rate type. Default exchange rate type is always M. But if you want to change it, you can change at the company code level, and accordingly, that exchange rate type you have to select here. From currency, so in our case, we are converting USD to INR. Okay, and valid from, I want to know what is the rate available from 1st of April 2020. Let's press enter. So you can see someone has maintained this rate, which is 1 USD to 1 IR. This is something I think wrong, but okay, let's not get confused with this. Let me see what is the next rate which is maintained in the system. After that, it is directly 4th of April. So what I'll do is I will maintain the rate for 2nd of April. Instead of 1st of April, I will maintain the rate of 2nd of April 2020. Okay, and here I'll say from USD to INR, rate is 73 rupees per dollar. Okay, let's try to click on save. So now from 2nd of April, this rate is entered in the system. Next step is I'll create an invoice. I'll book the vendor invoice. So I'm going to transaction FB60. Okay, you can also use Fiori if you want to perform these transactions. I'm using traditional GUI, but it is completely fine if you want to do the same thing in Fiori. So this is my vendor invoice date. I want to keep it as 2nd of April because I want the system to take the rate as 73. Okay, and in the reference, I just want to write, let's say test, and this posting date also I want to keep it as 02/04/2020. okay, which is 2nd of April. Now this invoice is having the amount of 1000 USD. Okay, and here I need to specify the expense GL account. Okay, and if cost center is mandatory, you have to enter the cost center also. Let's try to simulate this. If there is any other mandatory field, we will enter that also. Some warning, just ignore and press enter. Okay, seems okay. There is no error as of now. So let's also do one thing, click on the local currency to check what rate has been picked by the system. So you can see system is picking the rate from the OB08. So what is happening is whenever we are booking the invoice of 1000 USD, system is actually converting it into INR by multiplying with this particular rate that is maintained in transaction OB08. Okay, so the invoice is getting booked at 73,000, which means we are telling the system that we need to pay this vendor 1000 USD, which is equal to 73,000 INR from our reporting point of view. Okay, let's try to save this now. So this vendor invoice has been created, which means we need to pay $1,000 to this vendor. So as of now, if I generate any report, okay, let's go. If I go to FBL1N, which is my vendor line item display report, and if I just enter this same vendor, and I want to see all the open items which are open on, let's say 8th of April. Okay, there are multiple line items, but you don't need to worry. We need to see only that line which we just now created. I think this one. This is the last line that we have created, right, on 2nd of April. So this line, you can see it is showing we need to pay 73,000 to the vendor. Now, as I told you, the rates keep on fluctuating. Okay, so whatever was the rate on 2nd of April may not remain throughout the month. So let's say at the end of the month, I will again go to transaction OB08 and I'll tell the system that on 30th, that is at the end of the month, the rate has been increased, or maybe if you want to decrease, I will decrease it. So let's say 70, rate has been decreased to 70 INR, which means for the company, it is a profit because company will pay less. But again, this is unrealized because company is not paying now. This is just for the financial statement point of view. 70, let's try to save this. Okay, this is saved. Now I want to do my financial reporting, period end closing. So during the period end closing, as I told you, we normally use this transaction FAGL underscore FC underscore val. This is a transaction that we were using in SAP ECC. If you try this transaction in S4HANA, you will get this message. A new function exists for this function, which means this transaction code is no more available. It has been replaced with a new transaction. So in order to access that transaction, you will go to FAGL underscore FCV. Okay, and this is the new transaction for foreign currency valuation, which you need to execute every month end. Now, what is new thing here? Why SAP came up with this new program? Why that old program is not available? This is because there is a new functionality added called as simulation run. If you remember in extension ledgers, I explained you that there are multiple different types of extension ledgers. We already seen one example of predictive accounting. There was a predictive ledger. We already seen the example of the extension ledger. Okay, but this is another kind of extension ledger called as simulation ledger. So if that simulation ledger has been created, then only you will be able to execute this simulation run. Otherwise, most of the things are exactly same as what you were able to see in SAP ECC. So I'm not going to make you confused by the simulation run in this video. In this video, focus is the foreign currency valuation. So I'll just skip this topic and go to open item subledger. Okay, for simulation ledger, there is another video which I published. You can watch that video. So my company code is SF01. Okay, and I want to do this valuation at the end of the month. Okay, and that too at the end of April month. So 30/04/2020. Okay, on the last day of the month. This valuation area is a mandatory field. Okay, so just do F4 and select any of the valuation area as of now. Again, when you are working on the actual project, you have to select it properly. But here I'm just selecting this. I will show you in the configuration what exactly is the purpose of this valuation area. Okay, and as of now, I just want to click on this test run. This is where you need to select, you want to perform this foreign currency valuation for what? You want to reevaluate your vendor postings, or you want to reevaluate your customer postings, or if you go this side, you can also reevaluate your GL accounts which are managed in OpenItem. Okay, and also you can do the valuation, foreign currency valuation for those GL accounts which are not managed in OpenItem using the GL balance revaluation. Okay, so in our case, we are discussing about, our example is vendor related foreign currency valuation. So what I'll do is I'll tick on this evaluate vendors. If I tick on this, I need to provide the vendor number. So if I just want to do it for one vendor, I'll provide the vendor number. But as I told you, this is a month-end activity and we are not going to do this for one by one vendor. Okay, similarly, we are not going to do it separately for customers. So what we can do is in single program itself, we can select vendors also, customers also, GL also, GL basis also, and normally that is a process what we do in the month end. Okay, so just for the demonstration purpose, I'm unticking this, but normally when this program is executed in the background, normally you execute a single program for all different types of valuations. So I will specify all vendors. When I say all vendors, it means starting from 1 and ending with Z, all time Z. Okay, so it will automatically consider all the vendors which are open on this particular date. Right, so what I'm doing is I'm telling the system to perform the foreign currency valuation, book the unrealized gain or loss. Just remember one thing, this program will not book anything in realized gain loss. This program is only for unrealized gain loss because we are not paying to the vendor or customer. We are just doing this to show the real values in our financial statements. Right, so if you just want to do the test run, because in the postings I clicked on the test run, just click on this execute button and it will tell you what exactly is being reevaluated. So you can see here, when you booked the invoice, the rate was 73, so it was 73,000. Today the rate is 70,000, which means there is a 3,000 profit, unrealized profit that the company is going to make. Okay, so this, you can see this unrealized profit is coming in this new difference and amount posted column. Okay, also, if you want to see what would be the posting, what accounting document will be posted, you can click on these two postings and it will tell you that this 3,000 is going to be booked as a foreign currency unrealized gain, and there is a counter entry which will be posted in the balance sheet. Okay, so in balance sheet also we need to create a foreign currency valuation adjustment account. I'll show you, don't worry about the configuration as of now. So this GL account is P&L and this GL account is a balance sheet. And what is happening here is, you can see on the first of the next month, immediately, right? So you are executing this posting on 30th of April. On the next day itself, this posting, whatever you made, is getting reversed. This is also very important to understand in case of foreign currency valuation transaction. Whatever postings are executed on the next day itself, all the postings gets reversed. What is the reason? The reason is why we are doing this activity. We are doing this activity to carry out our period end closing for the month of April. So in the month of April, we will get the real values. But once our reporting is closed, we want to make the books as it is. Okay, so on the next day itself, on 1st of May, again system will post the reversal entries so that whatever unrealized gain loss was booked here will get reversed on the first day of May itself. Okay, again at the end of the month, again on the period closing, which we'll be doing for May, again, this program will be executed and it will book the foreign currency valuations, and that will get reversed in the 1st of June. So this is a continuous process. This is very important to understand. Many times it is asked in the interviews why we need to reverse, or like whether we need to execute a separate program for the reversal or all those things. So just remember, this is automatic. Okay, so if you are happy with these results, what you can do is you can just come out. Instead of test run, you can say update run. Update run means the actual postings will be made in the system. So if you click on execute, now you can see everything is green and there are 2 postings which are made, and these are the document numbers. So if you click on this document, display document, okay, just remember one thing, in USD, it will not show you any postings because the USD values were same. When you book the invoice, it was 1000. When you are doing this valuation, it is 1000 only. The postings will be only happening in the local currency. So what you need to do is click on this display currency and it will automatically show you the local currency. So this 3000 as a gain is getting booked for this particular currency, right? And you can see what are the postings here. The postings are unrealized exchange rate gain or loss account. So you can create 2 separate accounts also. Separate account for gain, separate account for loss. In my case, I created just 1 account, and the corresponding counter entry is going to exchange rate balance sheet adjustment account. Okay, so don't worry about the name. Name you can give whatever your customer is asking, but understand the concept. The concept is you need a corresponding entry to be posted. So if you are debiting this, you need a corresponding entry to be credited from the balance sheet account. Right? Now, since we understood what exactly is foreign currency valuation, why we need to perform it, how to perform it, let's talk about some of the configurations that are related to foreign currency valuation program. So all the configurations related to foreign currency valuation program, you'll be able to see obviously under SPRO, but within SPRO, you will go to financial accounting, general ledger accounting, periodic processing. Why periodic processing? Because this activity is carried out only at the month end. Normally, we don't carry out this activity in the mid of the month. Obviously, if you want to generate your report in the mid of the month and you want to do it, but not recommended because anyways, the posting date should be at the end of the month only, right? So that is the reason it is periodic processing. So you can click on Valuate, and these are the configurations that you need to verify. I'm not saying you to do these configurations, just to verify whether it is already available or not. So for example, if I click on valuation methods, normally SAP provides a standard valuation method. I think in this case it is EVR, which is always valuate. Okay, second thing is the valuation area. If you remember, system asked us the valuation area, we provided either IFRS or US, and this is assigned to the valuation method. Okay, so normally the one which is provided by SAP itself is assigned to this valuation method. Okay, so just verify that these configurations are already in place. Otherwise, you will get that error that there is no valuation area available to carry out this valuation in the system. Okay, and these are additional things that you need to specify. Check the assignment of accounting principles to ledger group. So you have different ledger groups, right? Normally leading ledger is 0L, and if you are creating any non-leading ledger, just make sure that your leading and non-leading ledgers are assigned to the accounting principles. This we already discussed in detail when we discussed about the ledger concept in SAP S/4HANA. Okay, then you have assigned the valuation areas and accounting principles. This is again what you are doing is you are assigning the valuation area to the accounting principle. Okay, if you want to change this, you can change according to your own requirement. Then you will go to foreign currency valuation, and very importantly, prepare the automatic postings of foreign currency valuation. So this is a place where you need to maintain these GL accounts. So what is happening here is we are able to see the postings, right? We just now made postings. So these 2 GL accounts, where exactly they are getting derived from? How system knows that, okay, if there is gain or loss, I need to book in this GL account and this would be the corresponding balance sheet account. That configuration is available here. Okay, this is transaction OBA1. In KDF, okay, so we are doing this exchange rate difference for open items or GL account items. In KDF, this is a place where you need to enter the GL account. So this is for, you can see this section is for realized gain loss. Okay, and this section is for unrealized gain loss when you are performing the valuation. So this is for unrealized gain loss. So you can have a separate GL account for loss, separate GL account for gain. In my case, I kept same. And then this is a balance sheet adjustment account. And this mapping you have to do for each reconciliation account. You can see this, the settings what I'm showing you is for the vendor reconciliation account 1000. Okay, so if you see this, this is reconciliation account for AP. So if you are using any other reconciliation account for AP, for each GL account, you have to specify this accounts. Okay, so this is how you can carry out foreign currency valuation, which is unrealized. Okay, whatever we have seen till now, we've seen only from the unrealized point of view. Then what is realized? What is realized gain loss? So realized gain loss is at the time of payment. Okay, now you are actually paying to the vendor. So let's say you are paying to the vendor on, let's say 10th of May. Okay, at the time of payment, let's say rate is 71. Okay, so when you book the invoice, the rate was 73. When you perform the valuation, the rate was 70. And now when you are actually making the payment, the rate is 71. What will happen in this case? In this case also, company will book the realized gain, right? Because this is actually I was supposed to pay 73,000, but I'm only paying 71,000 and the transaction is closed. So I saved 2,000 amount as a foreign currency realized gain, right? So company will book this in realized gain. How? Let's take this example now. So as I told you, 10th of May. So what I need to do, the first thing is I need to change the rate for 10th of May to 71. So valid from 10th of May 2020. From USD, the rate would be 71 to INR. Okay, let's try to save this now. And now I want to make the payment to the vendor. I will use transaction F-53. Okay, and this should be 10th of May 2020. 10th of May 2020. Check your dates properly. Okay, and here I am paying in USD, right? I need to pay 10,000 USD to the vendor. Vendor has nothing to do with the INR value. Vendor is only worried about how much I am paying to this vendor in USD. So my bank account from which I am making the payment, this is my bank account. The amount, how much you are paying, I am paying 1000 USD. For bank accounts, normally value date is mandatory field. So value date would be also same, 10th of May 2020. And this is where I need to specify the vendor. So this is my vendor and click on process open items. Ignore the warning message, just press enter. And under this one, which is the invoice that we just now created, I think it is this one, right? Yeah, this is the invoice that we posted on 2nd of April 2020, right? And we are making the payment of 1000. And this should result in the realized gain or loss of 2000. Let's verify, go to document, simulate. So in terms of USD, as I told you, it will not show you any difference because the invoice was 1000 USD and I'm paying 1000 USD. But in terms of INR, so if I click on display currency, you can see in terms of INR, the invoice value was 73,000 and we are making the payment of 71,000. That is the reason we actually realized gain here. Okay, so this is 2000 is nothing but realized gain or loss. Okay, and again, from where this GL account is coming, how system knows where to book the realized gain and loss? Again, from the same configuration. Okay, so from the same configuration, as I told you, it shows you both. This is the section for realized gain loss, and this is a section for unrealized gain loss. Okay, so let's try to save it. And system has booked the realized gain. So if you go to document and display, you will be able to see under INR, there is a profit of 2000 INR. Okay, so thank you all for listening to this video. Keep on listening. There will be a lot of new topics which I'm going to post in coming days. Thank you. Bye.